All right, today we are looking at the Revin Ribbons strategy. Very excited for the release of this, and special thanks to Crown being the brains behind this strategy. And yeah, really cool to see that it works out over time. The equity curve up and to the right, what we like to see both on Bitcoin and on the QQQ. I have both these pulled up just on a daily time frame. I will slowly post some other time frames, but I really recommend understanding and building around this yourself, jumping in and using the settings, and not just taking anyone's word for it, but actually understanding the fundamentals behind it, and always really take snapshots of the equity curve, go back and look at trading periods and see what price action did, the potential drawdowns. All of these things are very important to understand. We should never do anything blindly, of course. All right, let's jump into the actual indicator itself. The first section here from until the strategy settings is just the basic ribbons settings. So if you have questions about these, it's all on Teachable. All the descriptions for all of this stuff is on Teachable. I will say it generally helps to start adjusting these settings, especially if you're straying far from a one-day time frame and from Bitcoin. These settings can be adjusted and very much help. For example, on the QQQ, I put the exponent AI on 1.4, and I kind of generally will work from the top down and then sometimes bounce back and forth, just making slight adjustments and looking at the equity curve. Another thing I will just note, I did set, these are all pretty much default settings for the one day, except for resistance smoothing is on 3 and resistance multiplier is on 2. And just a quick explanation, though this is on the Teachable, the multiplier are multiplying the ribbon band. So if the higher support 2 multiplier is support 2 band right here, and it pushes that band further down, the higher it is, and so on. And these dotted midlines are just the midline band. They do not have their own adjustment. However, you can slightly change them later, and we'll talk about that. Okay, that's everything we need to know about the ribbons themselves. The first thing in the strategy is the start date. It's very helpful to have more recent history, especially for Bitcoin. It's really outsized gains before 2013, but even up to, I often would put this on 2018 or something a bit closer to recent price action history, but it kind of does depend on what you like. For the QQQ, I put this all the way back to 2006. We could even go earlier than that to get a bit of older data. The next thing to look at is long versus short. I will definitely leave this, if I'm wanting to go long and short, I will leave this on long and short while I'm adjusting the ribbon settings here, because most of the settings do adjust both. The exponent AI adjusts both. All band frequency, band update frequency affects both, all except for the support smoothing and resistance smoothing. Though those do slightly affect the midline, so they will actually slightly affect each other. These are completely separate. The multipliers do only affect one or the other. So the resistance multiplier will only affect going long because it's the take profit bands. The support multiplier will only affect going short. Apparently having some internet connection issues here, so excuse all of the errors popping up here and there, but we'll keep going. Okay, the next thing to look at is max consecutive flips. Now this is a very important thing to understand, because this will not trade quite as expected if you are using this. What I mean by that is I found that Bitcoin and general assets at times will flip-flop back and forth over the midline and eat up equity. So it is very helpful to only let it flip a certain amount of times within a certain amount of bars. So right now it's set, it says every 2 bars it can change direction 1 time. So it's pretty low. However, it doesn't let it, if it closes above and then immediately closes below, which I'm pointing at that one, but that one did not. There is one a little bit further back here that this actually applied to. But if it flips immediately, it will exit the trade, but it won't enter a new direction. I can't find, there was one just a bit earlier here. Let me find that really fast. I believe this, yes, this one right here is a great example of that, where it went long and then immediately closed below it. However, it stayed long. Now, there is something else that's really important to understand about this, because I have on this strategy the exit flat on cooldown off, which means it stayed long even though it closed below. So turning this on will actually make it exit right there, but it won't enter a short trade. Now that will unfortunately kind of hurt your potential for the upside. For example, here, it not only did it lose a slight bit on that trade right there, but it did not enter until this candle right here, which price action had moved quite a bit a ways in towards the first take profit, and even past actually the first take profit. So that did get in a much worse position. However, over time, obviously does not affect the backtest results a whole lot. And it is also important to know that when this happens, you don't have risk to the downside if you have your stop loss settings off. So if these settings are off, you can absolutely get, crushed by downwards price action because it won't close your trade. It keeps the trade open. So it's very, very important to have some kind of stop loss, and I would even tighten that stop loss. It's really based on preference, but you just don't want to get liquidated, obviously. So I would actually recommend having would recommend having exit flat on cooldown on. Much, much, much safer. Even if it does eat up a bit of profits here and there, it's definitely much safer. Or, kind of hand trade and actually get to know the price action a bit is also very helpful. But all right, let's look at midline forgiveness. This part of the indicator creates a small dead zone around the midline, so it keeps the trade live even if price slightly closes to the other side of the midline. This is a nice way to maybe stay in a trade when price barely closes below it, and then in this case you can see it flips above it. Now this actually is being handled above by max consecutive flips, but we could turn our cooldown bars to 0 and use this to kind of help keep in the trade. However, obviously if you have another close below it, it will exit even lower, so you will lose a bit more. But in cases where it maybe is as a slight fake out, this does keep it from exiting the trade and then entering the trade later on. So that is a nice option to have. And I should note this is not a percentage, this is a band width percentage, so it looks at how wide the band is and is a percentage of that. So it's based on volatility as as much as anything. The next thing is fluid versus fixed. Fixed takes the actual price at the band of the band at trade entry, so it will not change price slowly over time, whereas fluid is the actual price of the band. Fixed in this case right here would be 115.5k. So this resistance band right here, which is take profit 2, is at 115.5k. Take profit 1 is at 113.5k. So take profit 1 did regardless cross that point right there. Take profit 2, however, does not look like it would have, maybe just barely. And as time goes on, this does, as bands go higher, these bands tend to really change as price, because they have a lot longer before price action reaches them usually. So price on fluid will really adjust over time, really change over time, whereas fixed keeps all of these levels exactly the same. So the first 5 take profit bands are always going to be fixed at their exact level the trade entered at. And it's definitely very helpful if you want to execute limit-based orders and so on. Yeah, very, very nice to have. Speaking of limit, there's another option called limit-based execution. Now this is very much, I would say, in beta, or it is what it is. TradingView does not have a great way to execute limit-based trades live on the exact bar. So what we have to do is, if we're going to use limit-based execution, we have to look at the previous bar. So this is a slight combination of fluid and fixed. However, it only matters if you're on fluid, because if you're on fixed, this won't change anything. The limit-based execution will look at the previous price of the band and exit if price crosses that. You can't see it definitely affects the equity curve a good bit. I mean, the equity curve, I guess, generally looks kind of the same, but the percentage a bit. And you can see both scalp trades and take profit trades will enter close to where the actual price of the band is. So this is actually really nice. This is how I prefer to hand trade it. The unfortunate thing is, as the band changes price bar to bar, it does slightly change. So for example, right here you can see the scalp re-entry entered at the previous midline price. So we were in shorts here all the way down. It bounced up and connected with that midline and re-entered. So that was a nice trade that would not have happened if you were using close-based execution because it did not close anywhere near that. It entered short again as a scalp here, and then again took profit where this dotted resistance zero band was right there. And it actually is a slightly different price than that, and I'll show you why later because I have a slight offset on this. But anyway, it is very nice to be able to trade this way. The downside is that it will obviously use the previous band price and at times where bar to bar, if the band changed really dramatically, it is quite a different price. So something to be aware of. And again, I cannot guarantee this. So I would, if you're going to be trading like this, I would definitely recommend trying it out first and with a very, very small trade amount size, or just honestly hand trading, setting up alerts, and hand trading is also super helpful. Oops, sorry, I'm talking about the wrong thing right there. Yeah, limit-based execution. Okay, next thing, close buffer. This affects all bands and gives you a slight buffer of price buffer to take price. So if it's 5 points, it's not 5%. Again, this is based on band width, and it's based on the width of the midline to that band. So if we're looking at target 4 down here, then it's a much different. It outsizingly affects. Sorry, my stutter. It outsizingly affects that band, and there's if you don't like that, you can just put that on 0, and there's another way to affect this. But I do find that is actually helpful to have, and put it on 5. It's very, very low still, 5% of the band width, and it does help you take profit. A little bit, again, based on volatility, and oftentimes you get out at a little bit earlier, which sometimes might take advantage of a move that didn't quite reach the band. Other times you might, take profit a little bit early where you could have had a little bit more in hand. But that is there. I find it super helpful to have a small amount, 5, 10, maybe 15. All right, the next thing we're going to look at is past band handling. I prefer to have this on stack. What this does is if price closes far below, and even I have a couple of things to note. I do have some threshold filters here. So instead of going short back here, which would have been a nice place to go short ultimately, because of how price action worked in the past, generally these kind of moves, because of the RWP, were not super conducive to going short. I'll talk about that later, but jumping back to the more important things at hand, if the trade enters past take profit bands, what do we do? So this stacks it, so it means the next target will take profit at all of the skipped target bands. So for example, we took profit 3 times because it had passed the dotted band, the dotted support 0 band, the support 1 band, and the resistance 1 dotted band down here. So it had crossed all 3 of those bars by the time, or bands by the time it finally had the first take profit signal. So this is nice because you still get to take profit and a good decent bit of profit, and you're not stuck, either taking your first bit of profit at the bar open, which is just crazy because that would give you 0 profit. Or you can put it on off and ignore it altogether. But you could either stack it, you could skip, which means it skips the position size, so it won't even, it'll enter a partial position. It'll ignore whatever position size you have for band 1, for the first few bands that were crossed. Hopefully I'm explaining that well. I know it's a bit complicated, but you can read the tooltip as well, and I will have some more descriptions on the Teachable. Past band buffer just applies to the past band handling and how much it has to be past that for it actually to take effect, and you can read the tooltip right here. But it's a very minimal adjustment, and does not affect your strategy very much, but it is helpful to have. All right, next we're going to look at our external sources that you can reference. I like referencing other Revin suite indicators. RWP is one of my favorite. BBWP is also super helpful, but you can reference a myriad of indicators here. You just put them in the first user input box right here, and then you can have a threshold. So the RWP has to be greater than 86 for it to enter less than 86 for it to enter a long trade, and the RWP has to be less than 78 to enter a short trade. So this is why back here we did not enter price did not enter a short. The strategy did not enter a short at that bar. It waited later. Again, this was a bit of a missed opportunity. However, there are plenty of times where price closes below the the midline, and then it just turns around and has a pretty big loss. So, for example, this was quite a ways below that midline. So if price had, the next bar closed above it, would be a pretty decent loss. So anyway, I do find that referencing some other indicators, whether it's through slope, through threshold, or the indicator against itself. So say we want the RWP to be, RMO, which is a oscillator, to be greater than the RMO signal line. Things like that, we can have crosses or greater than, or, you're kind of familiar with these from the skeleton key idea. Now, there's a slight difference because this, it either just applies when you have threshold 1 on, it applies. If you have skip on, that means it will skip that trade altogether and it won't enter a long, I should do it on this because it's a short. It will never enter a short trade. It'll just wait for price action to play out. Unfortunately, you do miss out on all this price action going on here. So I do find that it is generally better to have it on, just threshold, but there might be, scenarios where you want it to skip that trade, especially on lower term time frames, where you want to skip that trade altogether if the condition is not met. So all of these have the skip option, so that if you want to just ignore that trade altogether, ignore that signal altogether, it will wait for the new cross to happen before it going on. And you can see it actually did not affect the it didn't affect it too bad. It definitely does miss out on some trades, but as far as the equity curve goes, it still looks pretty great. Okay, moving on. Oh, and the last thing to say, you can either apply these to long only, short only, or both. I tend to like to break it up. But say you're just doing a long only strategy, then you can use both of these thresholds for the long, and so on. The next thing to look at is slope filter. I think I already explained that, but same kind of thing. You can have it on. You can skip the whole trade, and you can also apply it to one or the other or both. This is if say you want to look at the RMO. Let me pull that up real fast here. Say you want the RMO slope to be positive, or the moving average slope to be positive to enter a trade. You can look at all of that right there. So it is super helpful to have the slope as well, and the external cross, which I talked about earlier. You can say I want the RMO plot line to be below the RMO moving average. You can also use crossover. I want to wait until it crosses. However, thing to note is crosses happen very rarely, and this indicator midline crosses also happen very rarely. So you'll very fast filter out your trades if you use crossover or cross under, because it only looks at that one bar where it crossed. All right, moving on. How to take profit? How much to take profit at each band level? So this is kind of displayed up here. Right here you can see that take profit 1 is 10%, take profit 2 is 15%, take profit 3 is 20%. We're in a long trade, so it's looking at the long side. Position sides. All of this table is kind of very helpful to have going on here. And so I do find that on Bitcoin it is better to slowly take profit more. This is a trending kind of strategy overall. So if you take a lot of profit at your first target, you're really not going to make up enough equity for the losing trades. So that's kind of the idea behind why the first few take profits are lower, and it slowly moves up. Now, I should also note that take profit 5, it does not matter what value is in here. You can put 0 in here. This is always going to take profit the remaining amount that is not used up here. All right, so you can see nothing changed here. That is just kind of helpful to have there to show it, and I need the tooltip to kind of show what was going on. But this means absolutely nothing, because you want your trade to exit the remaining amount. Unless, I suppose there could be scenarios where you maybe didn't want to do that, but I think it's best to formulate it like that for now. And if you use all your equity, say you put 100% in take profit 1, well, obviously nothing else is going to be taking profit after that. So this does auto adjust once the equity is all used up, and you can obviously look at long and short differently, and adjust your strategy based on that. Moving on to our offset band levels. Now, opposed to the close buffer, which applies to all bands, though slightly differently, it applies to all bands. You now have the ability to micro-focus on each band and slightly moving them towards or away from price action. And you have the ability to do this long versus short. Now, again, this is not a hard percent. and if it's on band offset, because again, Bitcoin over time, it used to in one day move 5-10% easily in a day. As time went on, Bitcoin moves less amount. Generally, I'm talking about generally. Obviously, there's days where Bitcoin can move 5 or 10%, but it's much less often. And so again, this is I found it much more helpful to base on bandwidth. So this is looking at the midline to that band and a percentage of that. Okay, so this is 6% of the distance between target one band and the midline, and so it's just a very small amount, but it does move the band, shift the band slightly towards or away from price action. Again, if you want a hard percent, you can do that right here. So this is where you would, if you don't want to use fixed, or you don't want to use the bands at all. All you're using is a midline. You can put it on limit percent or close percent. So limit percent will, and obviously it has to be positive. You don't want it to be negative. But let's look at it for long right here. So this first area right here, these are all for short. These are all for long. It helps save a good bit of space doing it this way. So I want to look at long, target 1. I'm going to say I want it to take profit at 5% limit above the midline. Okay, so once price moves 5% above the midline, it's going to hard take limit right there at that moment. If you have it on close, once price action wicks 5% past the 5% profit after the entry, it will wait for the closure and then exit at that close. So it's pretty useful having. You can see actually at putting that to a percentage did make our equity curve, or our equity net, go up a decent bit. I will say you are waiting a long time to take profit on target 1. So if you're okay risking more for more reward, that's great, but you are going to have more trades that barely make it to target 1 and then turn around and you're like, man, I wish I would have taken some profit while I had it on the table. This is all adjustable, depends on how you want to do it. And I do find, my settings here are adjusted a bit, and especially target 3 is much, much higher. It's probably, the funny thing is, it's probably even higher than target 4. And you can see this if you want to turn this on, shift band plot visually by offset. This will show you in reality what is actually happening. Now it does look a little bit ugly, and you'll see here in a minute. Nothing's very even. Obviously, this dotted target band right here is way up by our target 3 band or 4 band, so it moved up quite a bit, and resistance did move a bit there too. So it makes the bands look a little bit ugly, which is why I made it a separate toggle to turn on and off, just because I like things looking pretty. But it does help if you are trading the strategy and you're like, wait, why did it take profit there, or why did it wait to take profit? I would recommend, if you're trading the strategy, having that on so you can understand what's going on in reality. And I think that wraps up that section. I think I explained everything. There's tooltips, and I will also put this in Teachable in a typed out form to have as well. Okay, the last couple things to look at before it is wrapped up. We got scalp mode. This turns on intrabar scalp, not intrabar, I should say, but intra move scalp. So if you have that off, it's just going to take profit one time at each band whenever it's hit, and not re-enter. If you have this on, once it takes profit at a band, it will re-enter. So let me look at a good example of this, and you can see right here. It took profit took profit 1 and 2. So target 1 and 2 were hit all in one bar right here. So this frees up what I would call re-entry or scalp moves within this trade. So you can see that price action came down. Now it didn't quite close below the dotted band, moved up again. And this is where I would have liked to, if I was trading this by hand, could have easily gotten in when it touched that band and then taken profit right here. So you can get a lot of scalps if you're playing this by hand and using some knowledge of the market and wisdom. You can really trade this indicator and take a lot of scalps off it, especially, I won't get into that, but yeah, especially here recently, we had a lot of times where we could have taken that. But the strategy, unfortunately, I pushed it to its limits. That's all it can do. So what this is doing is it took profit here, target 1 and 2 and hit. Now it re-entered when we finally closed below the dotted resistance 0 band, is what I call this. Resistance 0. Dotted resistance 0 is this dotted band right there. We closed below it, and you can see it re-entered that. Now it re-enters whatever percentage, so it re-entered 15% of the trade, and so it will. We'll look at it later, but the API will send this signal to re-enter, so you'll go long again by that amount, And again, you got a nice little scalp, take profit. So it was a nice little trade right there of 15% of your trade size. Okay, so that's what's going on with these scalps. You have the ability to turn it on altogether or to turn certain ones on and certain ones off. So we can take, if we don't, you say, hey, I don't want to re-enter scalp 2 for going long, we can just take that one off and it will take a second, but it will not re-enter scalp 2. You can see it stopped re-entering there. And then we also have the ability to tell it how many times to re-enter. Now I found this is very helpful because oftentimes we only want to re-enter a scalp once or twice, because if you re-enter it a bunch of times, you're going to re-enter all the way down. So say price action, and this again, if you were trading by hand, it would be much easier to make some of the decisions. But say price moved all the way up, all the way up and took its final take, it hit target 5. And then obviously when price action is declining, it before it changes direction, it's going to hit all of those targets again. So you could be re-entering your scalps all the way down, and re-enter, and then you're at a full position size again when you finally touch that midline. And then you say you close below it, you've just re-entered a full position size all the way down, and you kind of eaten up a lot of equity. So I do find, again, if you have a general feel for the market and understanding of what's going on, it's way, way easier to do this by hand. But we need it in a strategy form that executes, on a true or false basis. So I at least put in this where say, hey, we only want it to enter one scalp per trade. You can put all these at one, or you can pick and choose. And it does, you can't see the equity curve. So it does kind of give, it is helpful to at least understand what's going on. So for the QQQ strategy here, I found it was way better to have most of these just enter one scalp, except for long 4 and 5, because a lot of price action was playing up in between S4. Why is it called S4? It should be, I guess it's scalp 4 and scalp 5, but basically target 4 and target 5. A lot of the and you can see right here recently on the history, we did get a nice scalp re-entry here, and it whenever it hits this dotted 2 band up here, we'll take a profit again. So yeah, there was a lot of price action going on within those bands, and so it was very helpful to have those scalps on the QQQ strategy at least. Okay, the last thing we're going to look at is our risk settings, the very, very important risk settings, especially if you have some settings above off that say, which I mentioned earlier, say you have exit flat on cooldown off, you definitely want to have some kind of risk, and you want to probably have it a lot better managed than 8%. But this allows us to turn risk off altogether if you want to do that. Allows us to put a limit, so as soon as the trade is entered, we can only lose X%. And we can also wait for closure, so say it price wicks up into 8%, but then closes lower. Say you're going short, and then price wicks up and then closes lower, it will get you out at a little bit better price than that. So close, waits for closure after that percent is hit. Okay, so that's everything that's going on there. I guess the only other thing is the automation boxes. This is really do your own research for this. I have a couple of options in here that you can use. This one is more legacy. This one is more Loadtron Lite. However, I'm not going to do your homework for you, and if you're going to be trying to automate this, this is not really what it's for. What it's for is having the backtest results and understanding what's going on. But these boxes are here if you want to try to use the automation function of it and do your own research. You can use a ChatGPT or some kind of AI tool to try to figure out what the best language is, but look, there's plenty of language in I believe Crown has the quant alchemy stuff going on and has some helpful stuff in there for this. But again, I would just look it up in ChatGPT and then actually test it. Don't blindly trade anything. Actually test to make sure it's working. And it's going to take you obviously a few weeks probably doing that to really understand. But if you already understand the API and all that stuff, then you probably have a decent understanding. So right now, this is here for your use if you want to try it out. Obviously, adjust these settings. So this is entered a very small amount, 0.01 Bitcoin, and this will go, so say you're going to go long, it's going to go long 0.1. You're going to go short, this is going to go short, however much amount is in there. Exit, obviously there's different languages for legacy versus Alertron Lite, so do your own research again. Make sure you're closing out your trade. This is for your, say, it's either your risk exit or your direction. So say it closes above the midline, it goes long. You're long 0.01 Bitcoin. Then you close below it immediately. You want to get out 100% of that trade, obviously. So this close will exit 100% of the trade, or you can put 0.1 there. But the problem is if you put 0.1 and you've taken profit, you're going to actually add extra shorts to that. So it's very important to understand what's going on in this whole strategy. So think through, do some research about what you want to use in these boxes, because like I said a minute ago, if I was to put 0.01 Bitcoin in there, if I had already taken profit some of the profit, then it would send a sell signal of 0.1 to the strategy, and that would add to the short that you would already have triggering here as well. Okay, so that is again long and short separate exits. Take profit 1 for long. We have for long and short we have separate take profit. I like using legacy because you can really fine tune this a lot more, and based on, you can use percentages, you can use a lot of different things when using Alertron Legacy. So I definitely like using that a whole lot more. It's way more fine-tuned. But if you don't have that and want to use Lite, I don't know much about it, but I've tried to at least give some idea of what it could look like. So you have to make sure all your amounts are what you want them to be. Say you want to take profit 0.001 Bitcoin at your first take profit. If you're going to want your strategy to look like your equity curve, then you're going to want to put different amounts in here if you're taking profit different amounts. So taking profit 10%, 15, 20, 25, 30, you're going to want to figure out what percentage or what actual value represents those percentages there. All right, so we got long and short. We have different take profit levels, and then we have, lastly, scalp reentry. This is how much do you want to re-enter when you are scalping. So all of this is very, very tunable to your liking. All I would say is very much test this, make sure that, and watch your whatever accounts you're using on to make sure it's actually executing as you want. Because again, this strategy is just built for you to understand visually what's happening. And if you want to hand trade or follow along, it's way better to do that, or not necessarily better, but I like hand trading a bit more. If you want to do the automation route and go the automation route, nothing's stopping you. But DYOR. Okay, that is everything I want to talk about today. I will be posting these general strategies on the Crown Discord, so you will have them available to you. And yeah, you can see here the QQQ settings. I'll just run through those, just give you a quick overview. In case I've not been able to post that, you can just hit pause on the video, and if you want to copy any of these settings. And honestly, I would really recommend fine-tuning a lot of this stuff. I just spent a few hours on. I'm spending most of my time building and coding stuff, and a lot less actually building the strategies here recently, except for a few main strategies I'll work on. But all of these can be optimized so much more. I haven't even added anything to the slope filter or the external filter. So all of this is, again, very fine-tunable. I will say, if you're going to be building strategy, it's important to do some trials and think about over optimization. Understand, I think Crown has some great videos on strategy building and how not to over optimize. Or he has a lot of I know he has a lot of content out there that he's talked about it here and there. So it's very important not to over optimize. So just kind of think about that. You can always ask questions on the Discord and so on if you have any thoughts, or post your own strategies. I'd love to see any strategies that you build on different things. But that's what I will leave the video off, and I will see you guys next time. Hope you enjoy it.